Hey traders, Todd Gordon here with TradingAnalysis.com. This is for CNBC's Trading Nation. Traders, let's go to work in Apple. We've seen a little bit of a rotation out of technology into financials, but I think that rotation out of tech has pushed our bellwether tech, Apple, into corrective support, which means longs could be a good idea here. So as we set this trade up, let's take a look at where channel support and upper resistance will come in. So let's connect the absolute lows of this pattern, which would be December of last year, connect that to September of this year's low. We're going to take this line, we're going to copy it, forming a parallel channel, and this is the upper and lower bounds in which Apple is constrained. And you can see that we are actually quite mid-range, and what you could do is you could actually come up with a midpoint as well. So if I copy this line, drop it right in the middle, you can see that Apple is right around the line that's bisecting its uptrend channel. So it's neither overbought or oversold here up on this time frame. Eventually, when and if the market continues higher, we should be able to reach up towards upper parallel resistance or up around the 185 to 190 level. So as we get off of this time frame, let's jump down and kind of zoom in on price action here a little bit and see what this recent volatility has done. Basically, what it's done, traders, is it's pushed Apple down into this old high around the $165 level. Okay, we have an old high here, and what we've done is a three-step pattern. And this is a very common technical pattern that we look for. So it's down, up, down. And what's key is we did take out the lows from last week, triggered some sell stops, got some fear in the market, but then you can see Apple is recovering nicely here, and it looks like we should be able to move on up towards the 180 level and into late 2017, early 2018, perhaps reach that 190 to 200 region, which will take Apple to $1 trillion market cap. So the trade I want to do for now is use this escalated volatility by selling a put spread, which is a bullish expression on Apple. So I'm going to go ahead and sell a put right in this region here, right around the $170 region. We're going to pair that up with a purchase of the $165 put. That is going to give us positive delta, which means we are bullish on the trade. Volatility has been a little escalated here in this recent little sell-off here, so that boosts the price of both puts and calls. So it's better to express our bullish bias by selling those expensive puts rather than buying those expensive calls. So let's go over here after that exhaustive analysis on the charts. This will be an expiration of December 29, 30 days from when I'm recording this video, selling the 170 put, buying the 165 put. Altogether, we're going to collect a credit right now of $158, depending on where you get filled when you see this video. Profits will be fixed, capped at that $158 credit we're receiving now. Our max loss, if everything goes completely wrong, all the way into expiration, will be $340. Of course, we're not going to let it get that far. So let's go ahead and put the trade to work. $1.58 coming at us, and that trade is now working. Now, let's go ahead and take a look at the chart again to determine where the stop loss might come in. Now, for me, if we break back below these highs at about 165, I'm going to start to get concerned about the outlook for this breakout. I really want to see this form a resistance, hold now as support. If we break through 165, close the trade, protect what risk you have out on the table, and simply move on. Otherwise, we're going to be looking for a move up towards about 180. For CNBC's Trading Nation, I'm Todd Gordon. Good luck on that Apple trade. Be sure to follow us at Trading Nation on Twitter for updates to this trade as well as all the other markets our traders are watching, and we'll see you guys in the next video update.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.